Hi, welcome back. You're tuned into Chartbusters on CNBC TV18. Well, the markets are doing well, but Titan, that is the top Nifty gainer after encouraging second quarter business updates. Manglam brings us more details on the same. So, Manglam, it was a sparkling update.
It was a sparkling update, and what a bling that Titan showed this time around, which is why perhaps it's also one of the top gainers on the Nifty. So let me just tell you what exactly happened as far as the second quarter of the company is concerned. First up, 98% recovery in their jewelry business. That's near normalcy. For a company that sells jewelry, this is positive news coming in, primarily because it's a discretionary item. Gold prices were higher, and September, which has a higher number of days which have the Shraddh period, that's a positive as well, where the company said they saw encouraging sales coming by. This 98% recovery does not include the 390 crore rupee worth excess gold that they've sold during this quarter. So add that back, and maybe we're looking at absolutely flat growth in the jewelry business year on year in the second quarter, and the next couple of quarters would be a positive. Over and above all of that, what is the key positive for the company is the fact that they've added nearly 14 stores during the quarter. Like I said, decent sales in September despite inauspicious period of Shraddh only jumps or bumps hopes up for the festive season. They've added 14 stores in this year so far, and that's the big positive, because companies add stores only when they see long-term positive growth prospects for the industry or no. The other businesses which they have, the eyewear and the watches business, that showed just around 58-55% recovery respectively. However, in September they also grew around 70% odd. So positive news, which is why the stock is booming in trade today. It has recovered nearly 75% from its lows, and apart from that, it's not only moved 75% from lows, it's just around 100 rupees away from its all-time high. So we will keep an eye out on Titan. But talking about Titan itself and the consumer space, it's been a buzz. Over the last couple of days, we've gotten updates coming in from Marico, from Godrej Consumer, and now Titan. So good time to get in some analyst expectations, analyst views on the stock and the sector as a whole. And who better than Abneesh Roy of Edelweiss joining us now. Abneesh, thanks a lot for joining in. Of the three updates that have come by so far, which one do you like the most? Where do you think is the most amount of money to be made?
Yeah, if you see, we are seeing demand trends being ahead of expectation in most of the sector. So clearly GCPL double-digit sales growth in India and Africa, clearly well ahead of expectation. Marico also very good set of numbers in Q2. But Titan definitely in the retail space is definitely among our top picks. It is in fact a braveheart idea. Even in Q1, Titan saw the best recovery among all retail asset classes, all retail companies, and that has continued in Q2. And this performance is in fact ahead of its guidance, wherein it had said that growth will come only in Q4. Now most likely in Q3 itself growth should be possible, given this time full festival impact is there. So we definitely like Titan. The stock is still 7-8% away from its life high. So I say that definitely more room for expansion is there. Consolidation clearly is happening. So we are not seeing other parts of the jewelry industry grow at this level. And as you rightly highlighted, 14 store addition, and then the company is spending in IPL, spending in new design. The latest development is to give to the customer lesser gold grammage, so that the overall the prices don't pinch the consumption. So that's a very smart strategy only bigger companies can do. So consolidation will keep happening. Yes, the two negatives are essentially the weaker margins in eyewear and watches and studded share being lower. But I think those are just transitory, and in Q3 we will see further good news on those also. So I would remain positive on the entire sector, FMCG and retail. In retail, our topics are essentially Titan, Trent and Jubilant, and we like V-Mart in the small cap. And in the FMCG space, we like Godrej Consumer, we like Hindustan Unilever, Nestle, Asian Paints. So these would be the top picks. But across the board, we are seeing Q2 recovery being ahead of the expectation and very strong recovery quarter on quarter.
Abneesh, exactly that is what I was going to ask you next. What is your read through? Because so far the quarter 2 updates have been very strong for these companies. You expect similar performance for the other FMCG names, and what kind of growth are you building in for quarter 2 for the FMCG sector?
In fact, we came out with a detailed preview also. Yes, for the entire sector, dramatic turnaround quarter on quarter. And most likely, all the key FMCG companies will not see a dip in Q2 versus in Q1. If you see, except Britannia, most other companies had seen a very sharp dip. So yes, we are seeing consumer demand strengthen. Rural definitely is doing quite well for FMCG. So except maybe one or two hair oil company or maybe Hindustan Unilever, where there is an issue of the cosmetics and the ice cream and out of home, even in Unilever, we don't see a dip in the sales on YOY basis. All the other FMCG companies should see broadly 5 to 8% kind of a growth YOY in the India business, in the home and personal care. Foods company, definitely Britannia will continue to grow the fastest in the FMCG. We expect 14-15% growth in Britannia in the second quarter also. Nestle also should do reasonably well. So yes, demand recovery across the board we are seeing.
Abneesh, fundamentally demand recovery is across the board. It is ahead of your expectations. We see all those things, but more importantly, now the question is how much of this is in the price. The FMCG sector, as you know, is known for being one of the most expensive. It's called the bad boy in terms of valuations, and currently as well, valuations are only moving higher. Most of the stocks trading anywhere between 50 to 60 times, as against sometime last year when they were trading 40 to 50 times. So how much more is on the cards as far as valuation upside is concerned? All these companies are great, but are they going to be great investment bets currently?
So 2-3 things drive the valuation. So one is clearly last year health hygiene was quite small. Now if you see a lot of new products in health and hygiene have come for most of the home and personal care companies. Second is in terms of cost. Because of this crisis, almost every sector and every FMCG and retail company has completely reworked the cost dynamics, and some of those will be structural, wherein more of temporary, more of discretionary spend not being there. So that is the second thing. And of course, e-commerce is a very big driver, and it has become much faster because of this crisis. But if I come to valuation froth, still in some companies like Hindustan Unilever, Nestle, from the peak level, still very big comfort is there, and Hindustan Unilever and Nestle have in fact underperformed the broader FMCG and definitely the Nifty also. So I would say in these two companies, growth revival is also there, and apart from this, comfort in valuation is there. So for investors, these two would be the names in terms of comfort in valuation and growth recovery. Yes, versus the 52-week peak, we have comfort here.
Okay, Abneesh, thanks a lot for joining us and giving us your perspective on the sector as a whole. But it's time to slip into a short break. But before we do that, here's something that you, our viewers, must take note of.